Hey everyone, this video is going to be about trying to identify the trend. I have this relentless pursuit of an indicator that's going to help me stay on the right side of the market. And you've probably seen other videos that I've put out. I have tons of different indicators that help me do that. Um, Part of the reason, by the way, is it's just so difficult for me to trade with the trend because I feel like it's already gone so far. Can it really go any further? I'm always trying to pick the reversal. It's an instinct I have in my head where I'm constantly trying to pick the corner. I think it's going to make me appear smart. I think it's ego. I think this is ego related. So I'm just being candid and transparent about my own struggles with trading. But anyway, I have created some indicators which are pretty remarkable at identifying the trend, and I'm going to introduce these to you right now. These dots here print either on downtrends or uptrends. So let me tell you what this is doing here. So this is we're looking at a 5-minute chart, by the way, of Google. We're going to look at a couple others as well. I don't know what we're going to find because I haven't looked at all these charts. But anyway, this is on the way down here. It's either printing in this kind of yellow orange color or red. And the difference between the two is whether or not the ADX is pointing up or down. So when the ADX is rising, that shows that the trend is strengthening. When the ADX is falling, it generally implies some sort of a corrective pattern. So the trend is not strengthening. It's not necessarily weakening, but it's not going. It basically is weakening it to some extent. So I trust the red dots more than the yellow dots. Now on the way up, it's the same thing. It's either light green dots or dark green dots. So you can't. It's not that easy to tell the difference. But here there's light green dots. Most of this is dark green because it's such an impulsive trend. But for example, these are all light green dots, light green, and then there's dark green here because the trend strengthens right before right before it reverses. So, which is kind of typical. But anyway, let me show you what this is doing. So it does a fairly good job of identifying things. So it's looking for the 8-period exponential moving average. Now it's really important that exponential moving average, 8 periods, is calculated on the open, high, low, close divided by 4. That's a setting that you can set. Normally it calculates based on the close of each candle. But instead, I think you should change it to the open, high, low, close divided by 4. That's going to smooth out the action. And in fact, Heikin-Ashi candles use precisely that to smooth out the price action. They actually use it on a 5-period moving average, believe it or not. But I use the 8-period exponential moving average, but I use the open, high, low, close divided by 4 because it smooths out the line. I think that's a really important distinction. So it's looking for, on the downtrend, it's looking for that EMA to be pointing down, not up, and the close of the previous candle has to be below what I refer to as the magic line, which is the variable moving average plus the Ichimoku Tenkan line divided by 2. So it's the average of those two lines. I have another video on that about moving averages. That's a brilliant, I call it the magic line. It's an amazing line. In fact, let me just show it to you really quickly here, because it does such a remarkable job. Let me see where I got the right one. Here it is. Okay, so here's the white line. So this is, I always do it in white, and I always have it as a weight of 2, just so it's really prominent on my screen. But again, I don't need to see this line because my other indicators incorporate this line into how they operate. So I don't necessarily want to see this line, but I want to show it to you so that you know what it's calculating. So and on the way down, it's going to look for the previous day's close to be under that line and the exponential moving average 8-period to also be pointing down. But this line does just a remarkable job of hugging price and keeping you on the right side of the trend. Like I said, I have another video. You should take a look at that because it really does a remarkable job. So let me take that off. I just wanted to show it to you. But so this keeps you in the trend. And again, here, there's no dots. And I can tell you why. It's because the 8-period moving average was going up for these two. these three candles, and then it pointed down again. So this happens all the time. And here's the problem, by the way, with this indicator and every indicator. I mean, every indicator. Uh, like when it first, like for example, over here, see these two yellow dots? And here's one as well. Here's a yellow dot. So is that the beginning of a downtrend? You don't know. You don't know, right? When those dots appear, you don't know if that's actually the beginning of a downtrend or not. All you know is that's the beginning, but it didn't. You don't know if it's going to be like this, where it just keeps going and going and going. You don't look at this. Look, there's a green dot right here. Is that the beginning of an uptrend? It's actually feasible because the market opens here, rallies up, fails, but then it tests and it comes back up. Well, that's actually a bullish pattern right there. So it could feasibly continue higher. It is possible, right? But in this case, it immediately reverses and goes back to a larger downtrend. So this is the sort of thing. And by the way, I have another indicator that I use to help me. So this this is another interesting indicator. This shows the 70 period moving average, but it doesn't plot it as a moving average. It plots it when the average is pointing down. It plots at 1.8 ATR above the line, and when it's moving up, it plots a green line 1.8 ATR below the line. So in an uptrend, there's always a green line below, and in a downtrend, there's always a red line above. So that also helps me. Like for example, this green dot, you wouldn't have taken it because you still have this red line above you. And that's kind of overhead resistance on a little more of a broader, essentially a longer time scale, a higher time frame, if you will. So these dots are on a very low time frame, but this indicator here is looking at a 70 period. Now, granted, in a 5 minute chart, that's not that much, right? That's 350 minutes, which is less than 1 day. So, but nevertheless, it does give you an idea of this trend. But let's take a look at what happens here. This is a huge uptrend. The green dots, they triggered, and they just kept you on the right side of it the entire time. You could have literally just followed these green dots. But again, when the green dots start, like look, here's yellow dots over here, and we're below the red line. So this could easily mean that the market's going to continue to move down, and it didn't. So obviously you can stop out. But I just want to be clear that these indicators, nothing's guaranteed. When something fires, you don't know if it's going to continue or if it's not going to continue. In this case, it did. So the idea is that when you're right, you're going to have a much bigger gain than when you're wrong, and that's a huge part. Your risk to reward ratio. Like when you take a winning trade and you ride it all the way up, you're going to make some good money on that trade. And when you lose, like in this case, you're going to lose, but hopefully you'll stop out quickly enough that you take only a small loss. So, and that's the art of trading, is knowing, like, look at this chop. Very, very difficult to trade this chop. Like, sure, you've got some green dots here, but when they end, I mean, look at this impulsive move down. If you didn't get out before that, you would have lost a whole bunch of your profit on the way up. And now a lot of times you can look at what I call marginal new highs and marginal new lows. Like this here is a high, and then it comes up and it does a marginal new high. You always have to be suspect of marginal new highs, especially obviously it's filling the gap from yesterday, the day before here. So you have some reasons to be suspicious of this. But again, this is the art of trading, is knowing this. But if you see a marginal new high that fails, that's a bad sign. And then this effectively is a bear flag. But anyway, this would have been incredibly difficult to trade. This here was very impulsive. So by the time you got in, how much did you actually keep? Here, it looks like you've got a real downtrend that you can follow with these dots. And again, when you're in the trend, these dots do a remarkable job. Now, here's an example of green dots when you've still got this overhead, this red overhead below you. Now, look at this, it actually flipped for two candles right here, and then it went back to red. So that's, again, these are confusing. Nothing's guaranteed in the stock market, but it's very difficult to trade markets where there's chop. But if you have an established trend, these dots will follow the trend and keep you on the right side. So let's look at a couple of other charts here. This is the Apple chart. Wow, look at this. So these are, again, now this line below, by the way, when it gets darker like this, the thicker line the line is thicker here and here. that's when the ADX is below 16. Which I like to look at as a situation where the market is really coiled up, or not the market necessarily, but the stock that you're looking at, like in this case, it's Apple, is really coiled up. So it's ready to start moving. So, for example, right here, this is, this here is coiled up. It's been coiling up this whole time. And so presumably this thing is going to start to move up. It does, but this is grinding price action. This is not very convincing. But it did go up. And then sure enough here, again, you've got a consolidation. ADX is very low right here. And then here it has a little bit more of an impulsive move up, but still not that convincing. But again, these dots do keep you on the right side of the trend. So the idea is if you're above the green line and you've got green dots, that's a trend that you should consider buying into. Again, this one, it surges higher in the morning. Hard to take that trade when it's already gone so far. But it does keep you on the right side until the EMA points down. So let's just go back here, see what else we can find. See, look at this. This, it gaps up and surges higher. Like, are you going to capture this move? Unless you got in here for some reason, you would not have. There's no way. It'd be very difficult to take this trade. If it gaps way up here and keeps just running, I know some traders would understand that and would buy it, but I wouldn't. It would be too hard. It's too hard. Gaps for me are incredibly hard. Gaps are very, very difficult for me to trade. I feel like I never do it right. But again, these green dots, they keep you on the right side. The green dots and the red dots, again, here you've got some yellow dots, but you're still above this green line, so I wouldn't take that trade. Turned out to be right. It's right more than it's wrong. It is remarkable. Let's look at Tesla. So again, here's a gap. Really difficult to trade this. These yellow dots, maybe, but even that drop here is so impulsive. For me, anyway, it would be hard to take that trade. But anyway, these are the yellow dots in this case. Let me just pull this up here. Time frame should be 15 days. Yeah. Okay. So you've got some nice trends here. Anyway, so again, the what's driving this indicator, you can build these for yourself, is yesterday's close has to be above the magic line, and the exponential moving average, 8-period exponential moving average, has to be pointing up to get green dots, and then the inverse for the red dots. And then the other indicator here with these green lines and red lines, it's basically just a 70-period moving average, but it plots the moving average 1.8 ATR above the line or below the line, just so that I have that overhang. I want to see that visual overhang. That's, if I'm going down, I want to see that above me. It's for me, it's reassuring to be like, okay, we are in a downtrend. Don't fight this trend. If you like this content, please like and subscribe to the channel. Guys, you have no idea how big of a difference that makes for someone like me, because you're telling YouTube that the content is good, and then YouTube's going to show that to more people, which is obviously what I would love. So if you don't like the content, that's fine. Tell me why. Leave a comment. I would love to get a comment from you letting you know how I can make these videos better. But if you like it, please like and subscribe. Thanks for watching, and we'll talk to you next time. Bye-bye.